Hello and welcome to the weekly wrap video. All the focus this week has been on Wednesday's FOMC rate decision, where despite the Federal Reserve choosing to keep their QE program on hold at $85 billion a month, they did choose to rein in market expectations of continued easing for longer, as Fed Chairman Bernanke indicated that they could look to taper their QE program by the end of 2013 and even bringing it to a complete halt by the midpoint of 2014. As such, we've seen a rapid adjustment across the global asset classes in response, with T-notes falling as much as 2 points since the FOMC rate decision itself, and the S&P 500 falling as much as 4%, with the dollar index rallying 2.25% from pre-announced levels. So markets have been adjusting to higher rates across the globe, leading European equity markets to dive well into the red as we're heading towards Friday's closing prints. Now, in terms of the emerging markets, this is also racking up an effect, as we've seen capital outflows out of the likes of Turkey, Brazil and South Africa, leading to their currencies reaching their weakest points against the dollar for quite a few years. Particularly in India, they're seeing a significant impact, with the Reserve Bank of India being forced to intervene in the FX markets to stem the capital outflow. So let's see if this is a continuing trend in next week's session. But other than the Federal Reserve this week, there has been some tertiary focus on the Chinese markets as interbank borrowing rates reach worrying levels, as the PBOC, that's the central bank, failed to provide liquidity post their 3-day market holiday last week in the form of those reverse repurchase operations. As such, they are doing this in order to, punish the banks in order to use their capital more wisely and halt their lending to the shadow sector. However, this did slightly decline in Friday's session, as reports did circulate that the PBOC had in fact folded and decided to provide liquidity to some of the nation's larger banks. But we're still looking out for official confirmation of these operations. So just a quick sum up, the Federal Reserve rocking markets and seeing a rapid adjustment to higher rates across the globe as the Chinese interbank borrowing rates reach particularly worrying levels, reaching multi-year highs in terms of the likes of SHIBOR, that's the Shanghai Interbank Offered Rate. So of course we'll look to see how this has an effect when we reopen on Sunday night over in the Asia Pacific markets. But in the meantime, that's all from me. I hope you had a good 5 trading days and I hope you have a fantastic weekend.